Hey, what's up guys? Good day and welcome to another video on WorkSmart Industries TV. Today is our 8th episode and I'm happy to have you guys in the house. Today we'll be talking about a lot of things. We'll be talking about trend lines, support, resistance, and a lot of beautiful things you can see on the chart. Today promises to be interesting, so just sit tight and keep your pen and paper close to you. So we'll move straight to the business of the day and we'll start with I will continue with our technical analysis, which we've been doing. And today, as I said earlier, we'll be talking about all this here on the slide. So before we go on to what we are going to do today, I want to do a recap on what we had studied some days earlier. Please, if you did not watch the video on candlesticks, you should go back and watch it because they are going to help you, or the things taught in that video will help you in what we are going to discuss today. So by virtue of review, a candlestick is made up of two parts, a wick and a body. The body is the big fat portion and the wicks are the tiny threads up and below the body. So it gives us information about everything going on in the market for a particular time frame. So you should go back to that video and check OHLC chart, meaning open, high, low, and close. So what is a trend? A trend is formed whenever the market moves strongly in a particular direction, whether up or down. So whenever buyers or sellers are in greater control of the market is said to be in a trend. So if you have the market moving mostly in an upward direction, or price moving mostly in an upward direction, you say the market is trending. And you have the price moving mostly in a downward direction, you say the market is also trending. So we have types of trends. There is an uptrend and a downtrend. An uptrend is when price is steadily moving upward, and a downtrend is when price is steadily moving downward. Meaning in an uptrend, the buyers are more in control of the market. More people are buying this security, more people are buying this tradable token, more people are buying this coin. That is why it is moving in an uptrend. While when most people are selling it, it moves in a downtrend. So what does it look like on the chart? So this is a picture showing you what an uptrend looks like. An uptrend is characteristically made when there is higher highs and higher lows being formed. So like we see in this picture, the high at this point is lower than the high at this point, or to say it the other way around, this high is higher than the previous high, the next high is higher than the previous high, and the next high is higher than the previous high, while the next low is higher than the previous low, the next low is higher than the previous low, just in that vein. So whenever the market is making higher highs and higher lows, you say the market is in an uptrend. And what should you be looking for in an uptrend? You should be looking for a good buying position. So you want to buy, or you want to enter a position where you're buying the token or whatever is being traded at somewhere along this point at the beginning of the trend and ride the wave upward. So an uptrend is usually what most traders are looking for, except those trading in margin markets where you can benefit from whether the market is going up in the upward direction or in the downward direction. I'll talk about margin trading later and subsequent videos. But for now, as a cryptocurrency trader, what you're interested in is if the market is making an uptrend, it's always in your favor. So you buy at anywhere in this point and you ride the wave up as the market goes towards higher highs. So what is an uptrend? When the market is making higher highs and higher lows. In the same vein, a downtrend is when the market is making lower highs and lower lows. Like we see in the picture, the first high is higher than the next high, that's higher than the next high, and so it goes downward. While the previous low is higher than the next low, which is higher than the subsequent low. So the market is steadily making lower lows and lower highs. So what are you looking for in a downtrend market? A downtrend market, you don't want to be trading in a downtrend market, except you're doing margin trading, which the trader benefits from whichever way the market moves, as long as he or she predicts that that's what the market is going to do. So we are not talking about margin trading here, we are talking about naked trading, basically, where you are expected to buy high, or you are expected to buy low and sell high. Sorry, don't buy high and sell low. you're expected to buy low and sell high. So if you find yourself caught in a downtrend market as a trader, the best thing to do is to exit the market. And I'll tell you the best points to exit as we go in the video. We'll be talking about retracement and pullbacks. But if you find yourself in a downtrend market, what you want to do as a trader is to exit and wait to buy at the bottom and wait for the uptrend subsequently. So by the way, I'm going to show you all this on a live chat. I'm not just going to use pictures, so just stick around. Consolidation. I told you there are two types of trends, the uptrend and the downtrend. So there are points in the market when the market is neither making an uptrend or a downtrend. The market is just ranging or moving from side to side or showing indecision. This period is known as consolidation and is said to be when the market lacks a direction. So unlike in an uptrend where the market is moving upward or price is moving upward steadily, or in a downtrend where market is moving downward steadily, in a period of consolidation, price moves sideways. It's not going up or it's not going down permanently. So it does this swing low, swing high, or swing high, swing low, swing high, swing low, swing high, swing low, and that's just what it does. In this period, the market is said to be consolidating. Now, these are very critical periods in the market, and the best thing for a trader to do is to exit the market at this point in time and wait for a direction to be taken. Except, of course, in peculiar situations where, when we talk about support and resistance, I'll review this again. But basically, the longer a market consolidates, the stronger the trend is going to make. What I mean by that is, if a market consolidates for a very long period of time, it tends to make a stronger uptrend or downtrend when it eventually decides to trend. So if you find yourself, or you find a token or a coin being consolidating for so long in a particular zone, or trading within a particular zone for a very long time, you should study well and expect it to move massively in a particular direction. When it's either going to nosedive and go down, engaging in a very serious downtrend, or it's going to shoot up and engage in a very serious uptrend. So consolidation is when a market lacks direction. So that's it about trend. What is it to be in an uptrend, a downtrend, and when the market is not trending, what is going to be doing, which is consolidation. So we'll go on to resistance and support. Now, what is support and resistance? All this information, trends, uptrend, downtrend, resistance and support are all in the chart. So resistance is like an arbitrary ceiling that price struggles to go above. As the name implies, resistance is like a point that price is finding it difficult to break. So it's like an arbitrary ceiling that prevents price from going above this point. It's arbitrary in the sense that there is no particular point or there's no particular ceiling. It's more like a zone where the chart tells you, or you see price reacting constantly at this zone, not being able to go up or not being able to go above this zone. So support, on the other hand, is more like a floor or base that holds price above it. As we go into the chart, you see that these points are not particular lines. They are more like zones or arbitrary zones where you see price reacting around these points. It helps you to map out price movement. And as we've known, price action trading, as we have known in price action trading, your ability to map out the movement of price will determine how much profitable trades you tend to close in the long run. So if you can predict fairly how price is going to react when it gets to a particular point on the chart, you know which part of the side of the chart to be on, whether a buyer or a seller. So resistance is like an arbitrary ceiling that price struggles to go above, and support is more like a floor or a base that holds price above it. I'll show you a picture about this and I'll later show you on the chart. So this is resistance. So this is resistance, and like we see here, these are two candlesticks. Both of them are rejecting this zone or finding it difficult to go above this zone. This zone will be regarded as a zone of resistance. So let's say this is a Bitcoin chart arbitrarily, and this is this point is, say, Bitcoin is $10,800. So you see Bitcoin coming from $9,000, comes to 10,800, rejects it and comes down. And the next day it comes again from maybe $9,000 or say 9,700 and comes to 10,800 and rejects it again. So you now understand that price is struggling to go above the $10,800 zone, and you call that zone a zone of resistance. In the same vein, it's not going below $9,000. It comes to $9,000 and it goes back up. It comes to $9,000 and it goes back up. The $9,000 zone becomes a zone of support. It's an area, it becomes an area where price bounces off. So you can see that support and resistance are arbitrary zones. So what are pullbacks? Pullbacks are also known as retracement. As I told you in the section on downtrend, when to exit the market, the best time to enter a market and the best time to exit a trending market is during a pullback. So if you are looking for, or if let's say a call was made, buy Bitcoin at $10,800, we are heading towards or buy Bitcoin. Bitcoin looks strong at $10,800. I'll advise all of you to buy if that's a message sent by somebody on a group, and peradventure you didn't get to see that message when it was sent, you saw it 2 hours later and Bitcoin had already made a move or moving towards an uptrend. You are not supposed to jump on that trade once you see the message. What you're supposed to do is to look at the chart and wait for a retracement which will be an appropriate time for you to enter. So this is an uptrend market. For instance, the market is constantly making a higher high and higher low, and say this is Bitcoin that is trading and the call was made at $10,800. Bitcoin is currently at $12,000 and you're like, wow, I missed the opportunity. You are supposed to wait for a retracement. So what is a retracement? A retracement is this point where the market changes direction a little bit from the trend before reversing and continuing on the trend. Notice that it is not changing its trend. Overall, the market is going upward, but it goes downward a little and goes upward again and goes downward a little, but overall it's making an uptrend. It's making higher highs and higher lows. So this period where the market changes direction from its trend temporarily is known as a retracement or a pullback. So if you missed the first entry, which most traders will miss the first entry, it takes a lot of skill to identify the beginning of a trend. Most traders jump in on a trend when a trend has already been formed. So if you missed the entry of a trend and you're looking for a point to join the trend, the areas marked as white are the wrong places to join the trend. So you don't join the trend when the trend is at a high, you join the trend when the trend is at a low or at the point of retracement. So this market is in an uptrend overall. I mean, the market's not in the picture, and it makes a high to this point, or this area of resistance here, and this area of support. It makes a high to this point and retraces to this area of support, then makes another high and retraces to this area of support, makes another high and retraces to this area of support. These are the points, the areas marked black. These are the best time, or these are the best times to enter the market, to enter an uptrend market. So let's say you are looking for a point to buy, and the market makes this swing high. You wait for the market to retrace and you enter, and it carries you along. And the beautiful thing about waiting for a retracement is that the market usually never comes back to the previous low. in a trending market. Let's in an uptrend market now. So if this was a chart, we will link this period to a price here, say 10,800, and up here you see it at maybe 12,000. So it moves from 10,800 to about 13,000, retraces back to 12,000. Notice it doesn't come back to 11,000 or the point where you entered, and it makes a swing high again, and you're in the market and you're good to go. But if you joined at a high, when it's retracing, it goes below your previous high, and you might be in loss, and maybe you are not, it might not be a good position you want to find yourself. So when is the best time to enter a market? You enter a market during a pullback, and the best time to exit a market if you are in a downtrending market is during a pullback. So if this was a downtrending market, as the market makes a swing low and makes another swing high, you exit at the swing high and allow the market to do its thing. Don't fight the trend. The trend is your friend. Don't forget that. Don't fight the trend. Always go with the trend. This is especially important in margin trading that I'll be discussing in future videos. So let's see how all these things look on a live chart, and let's draw some lines. So we are on to the live charts, and we are going to attempt to draw some of these lines we've been telling you about, to show you an uptrend, to show you a downtrend, to show you support, to show you resistance, and to show you how valuable they are on the chart. So this is a daily chart of Bitcoin against the US dollars, and we can see this zone from year to year. This is an uptrend. So let me draw something that makes it a little bit easier for you to see. 1 second, guys. So there we go. So you can see this zone marked here. This zone is an uptrend. You can see the market is constantly making higher highs, higher high, higher highs. So this is a previous high. This high is higher than the previous high. This other high is higher than the previous high. This other high is higher than the previous high. So it's constantly making higher highs and higher lows. You can see that this low is higher than the previous low. This low is higher than the previous low. This low. So during this period, Bitcoin was said to be in an uptrend, or this is characteristic of an uptrend. So if we go to this other zone of the chart, and we take a point from year to year, you can see that this is also a downtrend. The market is making lower highs and lower lows. So this high is higher than this high, or this low is lower than this. Sorry, I'm mixing it up here. But you can see that the market is moving in a downward direction, and that is a downtrend. And what happens in the downtrend? The market is making lower highs and lower lows. So this high, or this high is lower than the previous high, and this high is lower than the previous high, and so it goes down. And this low is lower than the previous low, and this low is lower than the previous low. So you can see that these are clear indications of an uptrend and a downtrend. So this explains what trends are. Now this slanted rectangle I've been able to draw is more like a trend line. This is the upper part of the trend line, and this is the lower part of the trend line. Whenever price is trading between two trend lines and respecting these zones, it is known as a channel, or price is said to be trading within a channel, excuse me. So these two lines I've drawn connecting the upper part of this candlesticks and connecting the lower part of this candlesticks can be known as a channel, since price is respecting this resistance line and this support line. So once price trades between two resistance and two support line in a trendy fashion, it is said to be trading within a channel. what's important about a channel? Price tends to make massive movement when it breaks out of a channel. So this is a live Bitcoin chart and shows the current price of Bitcoin trading as of today that I'm making this video. And we can see here that Bitcoin has broken out of a downtrend. So this channel I drew showing a downtrend from year to year, we can see that Bitcoin has broken out of this channel, and it's an indication, or it's a bullish indication for Bitcoin, meaning Bitcoin is going to make a very serious pull up towards an uptrend. So you can see that it was respecting this resistance zone and this support zone. It was trading steadily within this channel, and it eventually broke out of this channel, and this is what is known as a breakout, and we are bound to see Bitcoin going into an uptrend. So in the coming days or in the coming weeks or months, we won't be surprised to see Bitcoin trading at probably $17,000, which is a very strong point of resistance. So let me go to the Ethereum chart to show you resistance. Okay, sorry, 1 second. So this is a chart of Litecoin against Bitcoin, and as I showed you in the other chart, this is an uptrend and this is a downtrend. You can see the market making lower highs and lower lows, and this other way the market was making higher highs and higher lows. So what is support and what is resistance? As I said earlier, resistance is an area or an arbitrary ceiling that price finds it difficult to go above. So if you look at this zone on this chart, you can see that price has bounced off like twice on this arbitrary ceiling. So let me just draw a line there so we see what's happening. So you can see the green line there. Let me just change the color. So change it to a black line, makes it more legible. So the black line here shows more like an area of resistance that Litecoin is finding it difficult to break. So you've seen it has come once and bounced off around that area. It went down again. It came back and bounced off around that area and went down again. So that area now is known as an area of resistance. Notice it is not exactly a straight line. It's more like a zone. So if I use this rectangle to draw it, you see something like this. So it's more like a zone rather than a straight line. So this zone can be, sorry. Okay, I think we got it there. So this zone can be known as a zone of resistance. You can see that price is finding it difficult to break off, to go above that ceiling. In the same vein, this area here below can be known as an area of support. You can see that price is steadily bouncing off this zone. So the price comes down and bounces off and goes up again, comes down and bounces off and goes up again, comes down, bounces off and goes up again. And let me just draw the area for you. So that is an area of support that has been holding the Litecoin price for a while. Mistake there, 1 second. So that's an area of support. So you can see that price is trading between this zone. Now, what have we been able to draw here? This place that we've been able to draw is known as a channel. So like I told you, when price respects a particular zone, it breaks, it trades within a particular zone. An area on top serving as resistance and an area below serving as support. The price is said to be trading within a channel. And I told you that whenever price breaks out of a channel, it's bound to make a massive movement in a particular direction. So as you can see, Litecoin has broken out of this channel, and it might make a very serious downtrend towards the downward direction. So this is resistance and this is support. Resistance and support, by virtue of a reminder, are not exact lines. They are zones, because every trader chooses to draw them at, if you were to draw a line, everyone was going to draw his or a line at a different point. But if we pick a zone, you can see that most of us are going to decide that it is within the zone. Now, why are all these things important? Why is it important to know if a market is in an uptrend, whether a market is in a downtrend, or to know areas of support and resistance? It's because traders react to these areas in a similar fashion. So if we all think that at this point Litecoin has broken out of a channel, most traders are going to sell off Litecoin, and it will cause the price of Litecoin to come down massively. So you don't want to be holding Litecoin at a point when most of the traders have decided that it has broken out of a channel. Just saying. So that is the importance of knowing area of resistance, knowing areas of support, knowing trading within channels, trend lines, uptrends and downtrends. So I've showed you guys how to do all this. I think we'll go back to the slides now. So like I said earlier, by virtue of a review, we've done trend today. We've known how to draw trend lines, how to know if a market is in an uptrend or it is in a downtrend. We've also known how to draw channels, or how to identify channels and the importance of channels. We've also known support and resistance and their importance. So guys, this is what we'll be doing in this video. I look forward to seeing you guys in our next video, where we'll be talking about volume and RSI. RSI means relative strength indicators. These are all technical indicators you use in chart analysis. So guys, don't forget to like, share and subscribe. Thank you for watching, and see you on our next video. Bye for now.